Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody, and welcome to another edition of the AccessATrader.com weekend update show. First and foremost, I want to wish everyone a very happy Easter. Hope the rest of you guys who are not celebrating Easter, wish you guys a really nice, long, relaxing weekend. Again, as we always talk about, especially in the live webinar, it's incredibly important to get your mental health together. Very important. You always need to be centered. You need to be calm because there's so much happening. When we're traders, there's so much happening with, really digesting information, formulating an opinion, formulating a bias, having outside vehicles such as kids, marriages, outside commitments. We're putting so much pressure. Even if we don't do it, consciously, subconsciously, we're putting so much pressure on ourselves that when we get like a 3-day weekend, or especially go on vacation, we really need to decompress. It's so important because, again, when you enter a new week and you have gathered all the opinions and you've clicked the mouse and you've results, whether win, lose, or draw, you really need to be centered and focused for the next, trading day. I see so many traders, burning out mentally. Very hard realities, burning out mentally, very talented, but put so much emotional equity on the table every single day. They burn out before they reach, reach their really full potential. So it's very important, guys. Take this weekend to kind of relax, take a step back, refocus, re-energize, whatever the case may be, whatever your lifestyle is. Have some fun. Have some fun. Obviously, for all you guys who are celebrating Easter, celebrate everything with your family, your loved ones. Hug, kiss, laugh, love, everything that takes to be a good human being. So let's talk about the market, right? Let's talk about the market. Very crazy week, very good week, very good week of trading. We'll talk about that in a second. So last week we had this massive decline, right? Massive decline. And the one thing that I tell a lot of traders, and first of all, as everybody knows, I trade primarily, I would say 90% of the stocks I trade, they're with pretty much the same 10 stocks. And the reason why I trade the same 10 stocks, and again, everybody knows the names, the Teslas, NVIDIA, Alibaba, Netflix, Amazon, Googles, and Baidu's, and Apple's, and Boeing, and Boeing's recently, Square, stuff like that, the beta names, okay, the beta names. The reason why I trade them, number one, I've always stood behind the theory that the stocks that most likely their retail is not in are going to be a lot easier to control. And when you get an arbitrage, for example, the PS60 theory that I stumbled onto about 4.5, 5 years ago, when you stumble on an arbitrage and you realize where the algorithms, the black boxes, the quant models could possibly be entering your trades, and you get that push, right? You get that push. Retail is not in that trade. So for me, I trade primarily about 90% of those stocks. Now, I always tell people, you don't need to trade beta to understand the relevance, the importance, the position that they actually have in relationship with the stock market. Beta represents speculation money, okay? The Apples, okay? These are all feel-good stocks, the Amazons, the Facebooks, the Googles, right? These are all feel-good companies because we actually use these companies in our everyday life, right? You might not use Lockheed Martin, okay, every single day. You might not use, Kelly Clack, or use SGMO Biosciences. But there's probably something in your house that you use in your every single day life. That's Facebook, that's Twitter, that's Apple, that's Google, that's Amazon, that's eBay, right? That's Netflix. These are all feel-good companies. These are all cult stocks. And when people can relate to a cult stock, it feels good owning them. So that's why when you see the biggest market rallies, the full-blown bull market, rabid beast mode markets, they're usually led by Amazon, Google, Apple, Nvidia, Netflix, because these are the companies that we understand. These are the companies that everybody wants to own. And again, if you're a hedge fund or a mutual fund or even a pension fund that is betting on potential and betting on growth and betting on technology and the progression as human beings in the whole world that we live in, you want to own these companies for 3 to 5 to 10 years. Okay, so these are great companies. So they represent speculation money. So whether you're trading, Netflix for 10 shares, 100 shares, 100,000 shares, you can understand the dynamics of why you're in the company, why you like the company, and why you think it's a great investment or a trading vehicle. So when speculation money hits the market, it's a wonderful thing. The problem is, and this is where we say all the time, why these companies are the most important companies in the market. Now, again, at the end of the day, if Google goes away tomorrow, right, is the world going to end? Probably not. You can make a very, very valid argument that Walmart is much more important to mom and pop sitting in Wichita, Kansas than Google is, right? You can make a very, very valid argument that Lowe's or Home Depot, right, or CVS or Walgreens are much more important than being in NVIDIA, right, or having a Roku product, okay, or having a subscription to Netflix. Again, the world doesn't end if Netflix goes away, but if Walmart closes down, your bank closes down, right? Your Home Depot closes down, that's a big deal. However, from the trading aspects, they do represent speculation capital. So when there is a buyer's strike on speculation capital, they are going to be the first ones, okay? They're going to be the first ones that are really going to feel it. And what we saw now for the last 2 weeks is a very, very obvious, okay? It's a very, very obvious buyer strike, okay? Buyer strike and an extreme prejudice against these stocks with huge outflows, huge speculation outflows coming out of these shares. Now, last week we saw a really, really big decline, right? We saw an incredibly big decline in the NASDAQ 100. And again, for the point of this, for the point of this session, we're going to use the NASDAQ 100, the barometer, the ETF, for this point of discussion. So huge move to the downside last week in the QQQs, and obviously everything else. But the market wanted to see what was going to be the follow-up, right? The destruction of Tech 2.0. And the market got their answer. The market got their answer very, very quickly, and we saw another 6% decline. All the major indexes across the board. And the oddest part, what I saw about this week, just speaking from a beta point of view, I felt like every single company had some sort of headline attached to its destruction. It wasn't just like, well, the market's tired, it's a back test. Let's sell the stocks, we're going to buy them cheaper, it's all good, we're going to test bottom levels, they're going to bottom out, and they're going to start going right back to 52 highs. If you look at what happened in the last week and a half or so, especially spilling over this week, almost every single one of these beta stocks had some sort of stigma attached to it, right? We start off, you had Facebook, right? Starting off last week, you had Facebook, the story, the whole story of, the whole data breaches and all that stuff and privacy. Facebook sold. Then you had Twitter, right? Cintron came out and said, well, yeah, we were long the stock. Yeah, the stock is worth $25. Brought down Twitter. You had NVIDIA. Well, the cars that drive themselves. I'm like, what the hell does NVIDIA have to do with drive themselves? But again, it felt like it was almost like a witch hunt. It felt like it was either materialistic news or almost manufactured news that they almost needed to push these things over the edge. So you had this big destruction in NVIDIA shares. And it was kind of going on and on and on. And then you had Apple, right? You had the event. Oh, Apple, the event, the cheaper iPad. Yeah, nobody cares. They sold the stock as well. And the one thing that we kept on saying in the live webinar was, well, it's fine now until we get some bad news on Amazon. Remember, Amazon is the king of the jungle. It eats industries for lunch. It gets into your space, you're dead, because again, it's much easier to go to www.amazon.com than go to Best Buy, then go to Walmart, then go to Lowe's, then go to any place to find something that you could literally go on your computer, go on your iPhone, go on your Android, and you could order online. So I believed, well, everything was okay, right? Until if something could be going wrong with Amazon, then you gotta watch out. You really watch out, because things could get very, very aggressive very, very quickly. And lo and behold, again, sticking to the theme, okay, sticking to the theme of, well, maybe there's kind of a witch hunt, or maybe this is all coincidental, or maybe it's just something that the universe has in store for everybody who trades speculation capital. And lo and behold, you had the whole Trump tweets on Thursday, allegedly, right? Alleged ramifications for Amazon, and then the White House denied it, and then the White House then started talking about it again, and then more rumors came out, and lo and behold, the one stock that was the Teflon Don that couldn't do anything wrong, well, kind of did something wrong, and the stock just from Wednesday's session went from 1575 to 1365. So you had a 200-point drop. You had a 200-point drop in 3 days. Very, very big drop. So this made things very, very aggressive for traders. And again, a lot of newer traders and saying, "Well, I can't believe this is going on. This is the government's fault." And there's this is the hedge funds are they're market maker manipulation. Again, guys, for the 85th time, okay, the market maker. This is one of the most irrelevant things. Especially new traders here, they hear the word market maker and they use it out of context. 15 years ago, right, there was a lot of market makers. Fleet, I had buddies who ran desks on Fleet, right? Night Trimark, Night's still around. You had all these different market makers, right? You had all these different market makers. And yes, they used to trade for their books, right? They used to trade for their books and they saw the order flow. Now, guys, they are irrelevant because of all these ECNs, right? Because of all these ECNs and everybody is trading together. The market maker right now, and there's only really a few left. The market maker right now are 20, I promise you, as the day is long, there are 22-year-old kids out of college taking 100-share orders from customers, okay? They don't trade for their books, okay? I give you my word. They don't trade for their books, okay? They don't control anything. You have much more control than a market maker. All a market maker does right now is literally sit there and take customer orders. So the idea the market makers are manipulating anything is stupid. There's no sugarcoating. It's just stupid. If you don't understand what you're saying, please do your homework. There's no such thing as a market maker manipulation. Look, maybe in an OTC stock, okay, I'll give you that. Okay, maybe. Okay, but again, I'm not in that world. Doesn't affect me. I don't care. So there is no man behind this curtain controlling. There's nobody manipulating the market. The market goes up, as we talked about last week. The market goes up. It's went up linear for 15 months. Again, if you recall last week's video, it's all aggressive backtesting, aka gravity. But now we're starting to get a little bit of a witch hunt, right? We're getting a little bit of a witch hunt. And again, stocks like Amazon and Facebook and Twitter and NVIDIA. And oh, by the way, let's talk about Tesla, right? Still the greatest stock ever. We had some really great trades this week on Tesla. But again, eventually, everybody who's screaming on Tesla talking about, well, the stock is either going to go 1,000 or the stock is going to go to 5. Well, they're starting to get a little bit of leeway now. And again, I say this all the time. I'm not a bull. I'm not a bear. I'm an opportunist. I don't care about them burning cash. I never cared about them burning cash because, again, the whole thing is I traded on the upside. I traded on the downside. It doesn't make a difference to me. I just needed to have ranges. And obviously, as you can see this week, it had ranges. Technically, it finally broke down below that 294, 292 level we've been talking about for months and months and months, and it had this destruction. But now, right, the tables have turned a little bit on Tesla. If you guys remember for the last year or so, and this stock, the last 2 years is what, doubled, right? So it's gone on a monster run. And if you've noticed what happened in the last 2 years, every single time there's been some negative headlines, every time there's been some negative earnings and, worse than expected. Wall Street continued to pay for potential. Again, I use that example as drafting Kobe Bryant out of high school, okay? We don't know what Kobe's going to bring, right? We don't know what Kobe was going to become. We don't know what Tracy McGrady was going to come. We didn't know what Kevin Garnett's going to come. We didn't know what Kwame Brown, you guys remember Kwame Brown, was going to become. Here's the problem, right? Here's the problem. Wall Street pays for potential. Okay, when you're a growth story, they love it because it's sexy, because everybody knows Tesla's not a car company, it's disguised as a technology company, right? So again, everybody talks about, well, it's a good fit for Apple, they should buy them. Okay, it's a great fit for Google, they should buy them. Okay, there's a great fit for Amazon, well, Amazon can buy anything. Okay, keep that all in mind. And just like the NBA players that were drafted out of high school, NBA teams were going to give them some leeway. So yes, Kobe Bryant became great. Kevin Garnett became great. Dwight Howard became great, right? Tracy McGrady became great. And then there's a guy like Kwame Brown, drafted out of high school, a lot of potential, the #1 pick of the draft, right? The #1 pick of the draft. Let's see him become great, Tesla. Let's see Kwame Brown become great, Tesla. Let's see the growth story. Let's see the ability. Let's see what he could turn into, Tesla. Eventually, Kwame Brown, right? Eventually, Kwame Brown had completely underperformed, right? Completely underperformed. And he was probably out of the league, probably in his mid-20s. He got drafted around 18, 19 years old, probably out of the league in the mid-20s when normal human beings are starting to find their footing in life and just starting their careers. So for every Kobe Bryant, right? For every Kobe Bryant, your Amazons, your Facebooks, your Googles, there will be, right, a Kwame Brown. Now again, nobody wants to talk about Tesla as a Kwame Brown just yet, but again, things are starting to sour. Wall Street is being less tolerant. When you see good news coming out, like 20 new trucks being ordered, whether it was a UPS, a FedEx, one of those things, and the stock is being sold, aggressively, that is when Wall Street is starting to frown upon the potential and now starting to look at reality. So again, is Tesla going to be at 500 one day? Yes. Is Tesla going to be at $5 one day? Yes. And anything in between. But for now, we use it as a technical area to view expression of interest. We watch the pivots, we trade it accordingly, we have an opinion, and we trade it both on the long side, we trade it on the short side, and for now, and still the greatest stock since sliced bread. It really is. For all you guys who are sitting there talking about how horrible the company is, how great the company is, instead of the bias, trade the stock. You'll make so much more money trading within these channels than you'll sit there for your opinion. So look, can the market crash this thing a year from now? Absolutely. Can the stock go to 1,000 a year from now? Yeah, absolutely. But who cares? Trade the premise. Don't trade the fundamentals. Trade. That's the whole point. Trade the premise. If you're an investor in this thing, I don't know what to tell you. I don't know what to tell you. Depending where you're long, I don't know what to tell you. But from a trading aspect, from a trading vehicle, pun intended, this is the best of the best out there. So let's talk quickly about Friday. Friday was one of the more interesting days, right? Us as traders, we usually have an opinion. Like I have an opinion every single day. I have a bias before I can start trading. I have an opinion every single day. And I said pre-market during our morning strategy, I said pre-market that I felt that if Tesla and Amazon, right, because again, stocks are really crippled. If Tesla and Amazon can trap shorts, right, I felt like there's going to be one big sell-off. I felt like if they trap shorts, they could have a big run. They could have a very big run. Just because, just from the point of, look what Tesla did. It went from 347 all the way down to, the stock's down 100 points, right? Amazon's down 200 points. So I felt if they could trap shorts somewhere in the first hour and a half, I think the stock, I think both these things could really squeeze. And the one thing I always say as a professional trader, you need to have a bias, okay? You need to have an opinion. Obviously, you need to have a process. And the one curveball, right? The curveball that I always say, charts don't lie, but sometimes they don't tell the truth. So I was having a pretty good week, right? And if the first thing out of my mouth on Friday, we talked about the trades, we talked about the setups, and I was really focusing on Amazon and Tesla. Okay, I felt like this is the day they were going to trap these shorts and they're going to take these stocks higher. And if you look what happened at the end of the day, right? If you look what happened, they did, and I actually caught both of them, right? But first there was something in between. So here's the part where charts don't lie, but they don't tell the truth either. So if you notice right over here, I'll show you this in a second. So Tesla opens up, right? Tesla opens up and the stock goes down immediately $1.50, $2, which wasn't bad, right? Which wasn't bad at all, because if you notice a lot of these stocks, they were getting hit pre-market. right? So it wasn't bad at all. So I said, look, if this thing goes green, I think it's going to go. I think my premise is going to play out, and I think everything will be all well. So I buy the stock going red to green, and within seconds, the stock goes up $1.50 in seconds. Now, usually what I always do is I usually take some off and then use 99% of the time, I'll use break even as my stop, right? I'll use break even my stop. For whatever reason, mentally, I already sensationalized the trade to such a degree, right? I already mentally sensationalized the trade to such a degree, I was going for the 5-6 point move right out the gate, right out the gate. Because I felt, well, look, stock is down 100 points. They trap the shorts. This thing's going to go $5-6. 99% of the time, I will take money along the way. I always talk about that in the live webinar. I always talk about that in our live PS60 Twitter feed, the private Twitter feed. Take the cash flow, right? Take some cash flow, keep a runner, use break even as you stop, rinse, repeat, rinse, repeat, rinse, repeat. Okay? But I already sensationalized, and this is what we always talk about forecasting. You look, wanting a reality that's different than, well, the reality. And I was looking for that 5-6 point move right out the gate after they trap the shorts. The stock goes up $1.50, $1.60, whatever it was. I don't take off a single share. So instead of using break even as my stop, I don't do it. I have a mental fart. And again, as great as technical traders that we believe we are, that we believe we can be and should be, or all us aspiring traders and all that good stuff, right? All that good stuff. We're human beings, right? We make mistakes. We have brain farts. We overthink. We overcompensate. Our brain sometimes shuts down. So I don't use break. First of all, I don't take any money off the table. I don't take any money off the table going red to green. And the stock winds up going, down $3. I got $3 on it. So I wind up taking a pretty good loss, right? I wound up taking a pretty good loss. And I said, wow, I broke a very simplistic rule, but you know what? Look, I'm having a very, very good week. I'm okay with that. And if I don't put on another trade today, I'll be fine. And if you guys remember, right? If you guys remember at that point of the day, the market was dead. The market was completely dead. It was a day before a long weekend. The market was dead. And I said, wow, the worst part about this day is, number one, I broke a very, very simplistic rule. I didn't take any money. I let the stock go against me. And I didn't use break even as a stop because I forecasted the trade. And now I can't make any money back because there's nothing going on. Everything is sitting completely silent. And this is where we talk about being. This is where we talk about being a professional instead of being an alpha chaser. We wait for our spots. And the one thing I confirm every single day, every single year, we hammered home in the live webinar. We don't trade because the market's open. We trade because we have value. And I was sitting there, no value. And out of nowhere, because of the grace of the market gods, and this is what's great about the process of being a professional, patient trader, you're going to get your process highlighted eventually, whether it's going to be today, tomorrow, or the next day. Eventually, it's going to come and you're going to get aces. Out of nowhere, if you guys remember, out of nowhere, we got massive, I'm talking about massive call sweeps, the complete opposite of the previous day when they were buying puts on Tesla, on Apple, on Netflix, on the video, hammering, on SPYs, on IWM, on Qs, millions of dollars hitting the puts. Millions of dollars. No love at all for the bull. Complete opposite on Friday. We started seeing big volume coming in. Call sweeps on Facebook. Call sweeps on the video. Just literally one after another. And then it finally said, well, wait a minute. These things are waking up. They're not going down anymore. They're coming out of the ranges. Let's see what we could have. And what really changed the day, and I had no problem leaving the day. I had absolutely no problem leaving the day red. I had no problem. I had a very, very good week. I was good with that. I had a misstep on Friday, brain fart, but you know what? I saw the opportunity I could get back in the game, and you know what? I wasn't going for the 5-run home run. I was going for, let me take it trade by trade. Let's see what we have.